Good afternoon, everyone. I would sure much have preferred room, but hopefully that's next year. So one more virtual Outlook presentation, I hope, and uh, and then hopefully back to some normalcy. But I'm pleased to be with you today to bring your cattle market outlook to you for your AGM here in June. So as you guys know, I'm Ann Wasko. I'm a market analyst. I live in East End, Saskatchewan, of course, with Barry, and we ranch down here, running a commercial Red Angus-based herd. And certainly it's been a year plus of lots of challenges for us. So we've got lots of things to talk about on the market as we go forward. So I'll try to get through lots of stuff in a relatively short period of time, but we'll have lots of fodder. I think I have to start with just the reminder as we go through, not just COVID, but even thinking back to the fall of 2019 when we had the fire at the Tyson plant in the US, just how much these supply shocks create havoc for a lot longer than I think many of us would expect. So here we come again. Here in 2020, the red line showing you what happened to fed cattle slaughter when COVID first happened last year, and how long it's taken for us to kind of get out of the quote backlog and all the indirect backlogs after that. But pretty clearly right off the bat, when you have these supply shocks, you have these drastic price responses at wholesale. So that's when the choice cutout took off this time last year into all-time new record price territory. But here we go today in 2021 with prices the second highest they've ever been, and that's certainly not a supply shock. So we'll talk a bit about that more in a minute. But again, I just wanted to set the stage for how these supply shocks, and again, if it was the Tyson fire and then it's COVID, and again, these are feeling like a more regular than a one-off black swan event. But nevertheless, that's where we've been. So first off, of course, I like to talk about beef supply and where we are in terms of the numbers. And I think this is a critical piece, especially as we go through the second half of this year, and more importantly, as we head out into 2022. First off, Canadian beef cow numbers, really no surprise to any of you guys watching this. On January the 1st of this year, we had one of the smallest herds in over 30 years, 3.5 million beef cows nationally. Pretty similar to where we were a year ago, but compared to January 1, 2019, this herd's 4% smaller. So certainly, again, not a surprise for any of us, but when you stop and think about, even as recent as 2008, when we had 5 million beef cows in this country, today's 3.5 million, it certainly sets up in tune with the supply situation for numbers here in Canada, all the way through the feedlot and packing plant systems. Last year, just for the records, we did have a very small cow marketings. And when I talk about cow marketings, it's of course slaughter plus exports for slaughter. So combined, they were down 10% last year. Slaughter was down 20 and exports were up 30. So recall, packing plants in 2020 in Canada were really focused on getting young cattle processed and through the system. And so cows certainly kind of fell to the background, if you will, and that's why slaughter was off 20%. Luckily, we were able to move a fair number of cows into the US market for harvest, and so exports were up 30. But at the end of the day, the number is still down 10%. So you can see on the slide in front of you how that looks. Now, those of you thinking that, well, we've had such dry conditions here in Western Canada, and especially through the southern part of the prairies, all through 2020 and really until just, recently in May, that we really should be seeing cow marketings up. And it's just not the case. So whether we're still waiting for that second shoe to fall in terms of pasture conditions, or whether we've gotten enough rain soon enough to put that decision off for now, year-to-date 2021 marketings, which includes slaughter plus exports, is still down at the end of May, down 1%. So we aren't seeing any indication yet of an increase in marketings of cull cows. So something we'll certainly keep an eye on through the second half of 2021. So because of that small marketing number in 2020, our Canadian beef cow culling rate was pretty small, 10.7%. And again, well under that kind of long-term average of around 12%. And anything kind of above 11%, we talk about liquidation, but certainly under that, we're far from it. We're actually, technically still in very much of a kind of an expansion type. So any of the numbers we're seeing right now, certainly not leading us to believe that there's any kind of sell-off of the herd yet. A little different in the US. The US beef cow herd has certainly moved into their contraction phase. They now, in hindsight, it's pretty clear that January 1, 2019 was their peak of this cattle cycle, if you will. On the first of this past year, January 1, 2021, we saw the US beef cow inventory down 100,000 head from previous year, and it is now down 500,000 head from 2019's peak. The forecast you see there on the screen, the black bar for 2022, indicating right now, the expectations of another 1 to 2% decline by the start of. And so for those of you keeping math, that'll be pretty close to 1 million head smaller than that cow herd of 2019's peak. So certainly looking at smaller supplies coming from US cow-calf operators as we go forward. I think one of the things certainly driving some of the decisions that are being made in the US right now in terms of continuing to see a large US beef cow slaughter here in 2021. Pasture conditions that USDA reports through the growing season have started off 2021 at kind of the worst level, certainly in the last 20 years and possibly even prior to that. But so that is concerning, and I think certainly supports what we're seeing going on right now, even in the month of April, which is the last data I have from USDA for beef cow slaughter, but we saw US beef cow slaughter up 8.4% in the month of April. So we'll be watching this closely. Slaughter at this present time at this rate is above the levels that we would have started at in 2011. And again, 2011 was one of the largest US beef cow slaughters in the last, certainly decade at least. So the fact that we're higher than 2011 is going to lead us to believe that we are certainly seeing a sell-off, and maybe more of a sell-off than we were anticipating in terms of the US conditions, especially in terms of pasture conditions. Cattle on feed numbers in Western Canada, May 1st, this is of course data collected by CanFax. They were down 5% from a year ago, but still 3% over that 5-year average. And again, I think it's important to remember that 2020 cattle on feed numbers were inflated. We started off 2020, even before COVID, with the largest cattle on feed numbers in Western Canada since 2002. So we started off with inflated numbers, and so comparing our current numbers to 2020 is still a bit of a false comparison, I think. But at this point, still comparing it to the 5-year average is important. We do expect these on-feed numbers to drop pretty substantially as we now go through and into the second half of this year compared to where we were a year ago. So I guess one of the things that must come to the forefront is, how are we feeding more cattle with that smaller cow herd? And I know I've talked to you a bit about this in the past, but we continue to see this as a pretty critical piece of that supply picture. And in a nutshell, we're seeing fewer feeder cattle leave Canada than historically, and certainly a new supply of feeder cattle imports coming into Canada to be finished all throughout the Canada, particularly in Western Canada. And if one thought that might have changed in COVID, the slide on the right-hand side even shows you up to the first quarter of this year. 2021 feeder cattle imports continue to run at an elevated pace. We've already seen just short of 100,000 head, 98,000 head of feeder cattle coming into Canada. whereas our exports for the first quarter of this year were about 35,000 head. So certainly running in a strong net import position, like we were in 2020, when we ended the whole year with about a net import of 150,000 head of feeder cattle. For the record, we exported about 100 head last year, which gave us that net import at 150. And again, I think, one of the factors behind that strong trade influence on the feeder cattle supply is we continue to see expansion in the Western Canadian feedlot sector. January 1st of this year, on 2021, the Canfax demographic report for feedlots, finishing feedlots, I should explain, was up 15% from where that number would have been on the start of January 1, 2018. So that's come through various ways. Some of it's been through expansions of existing yards, adding more pen space, increasing their capacity. And in some cases, it's been complete new yards being built. So those two factors have certainly seen the expansion of yards grow, while at the same time our cow herd has not. So how do you fill these new pens? You certainly have to seek those feeder cattle supplies, or certainly reduce the number of feeder cattle that are leaving the country. A couple of things just in the short run, and I think we'll be able to have a different discussion about this a year from now, but certainly all through COVID and in the first half of 2021, we have not had a shortage of beef. We have the supply of beef continues to run at some fairly stout levels. And 2020 in the US was up, we saw production up 1%, and the forecast for this year is another 1.5% increase. Both of those years will be all-time, last year was an all-time record US beef production. This year will be an all-time US beef production record to surpass last year. So this has not certainly been a supply shortage. Here in Canada, even with those harvest challenges we saw back in the second quarter last year, beef production was for the most part pretty flat in 2020 versus 2019. And I think one of the things to just be aware of it here in 2021, in Canada, just our year-to-date beef tonnage so far this year is already up 20%. Now that's going to change in the second half of this year, but we've set the stage with some pretty significant tonnages of beef in the system for the past year and a half. Now in the US last year, of course, with the supply challenges and some of the COVID issues around packing plants, they didn't get as many cattle harvested as they needed to. And so their fed cattle slaughter last year was down 3%. This year, they will more than make up for that. But really, through the first part of 2021, we're going to be through a lot of that backlog and get those numbers that were delayed out of the system. So I think once we get those cattle cleared through the system, we'll all be in better shape in terms of currentness, in terms of the numbers that lie ahead of us. But again, it's taken a lot longer to clean up the problems that COVID challenges have created over the past year and a half. In the US, their cattle on feed numbers on the 1st of May were up 5% from last year. That's the second largest ever, and still up 4% from that 5-year average. So again, just to illustrate that all through this, we continue to run it pretty elevated on feed numbers. I truly believe we're going to continue to see those on-feed numbers drop pretty substantially as we go through the second half of this year. But again, that's what's been plaguing the industry really over the last many months and still is hanging over the US industry even today in terms of getting current and getting the last of those cattle out of the system, getting carcass weights to really drop. So on the demand and COVID side, I think, some of the best news that I really can report, that if you had asked me this back in March of 2020, I would not have thought that this would have been one of the outcomes of COVID. But beef demand in Canada in 2020 was significantly stronger, a 5.5% increase in demand in 2020 over 2019. That's the third highest in recent history. Only 2016 and 2015 would have surpassed that level. And so certainly very strong beef demand from Canadian consumers. And when you stop and think about it, as we watch 2020 unfold month by month, we saw consumers, being forced, the stay-at-home orders, eating at home, cooking at home, but having that disposable income because they weren't out spending. So being more than willing to spend more on beef, in a nutshell, is exactly what happened. And I think the other really exciting news that we just was released by StatsCan here in the past week was our consumption data for 2020 was also extremely positive. Beef actually saw a notch up in per capita beef consumption last year by 0.3%. Yes, not great, but 0.3% of an increase in per capita consumption. Poultry really was pork really was kind of took it in the chin, if you will, and saw their per capita consumption down 15%. Now, granted, a lot of Canadian pork headed to export markets in 2020. So that was kind of the explanation of what happened there. Chicken consumption, poultry consumption down 2% in 2020. So it's certainly a positive news story. We know retail beef prices were higher at the counter last year. We saw that as the data came through. They were actually up 6% in 2020 versus 2019, but that didn't defer consumers. And that still continues to be the case here in 2021. We always wonder at what point do the two conflict, and does beef get out, quote, out of line with competitive protein choices? And that's something I certainly watch and monitoring as we go forward. But up until now, consumers have certainly been more than willing to step up and buy more beef at higher money. And that's where the demand index increase comes from. I guess, as we go forward, especially thinking about later this year and on into 2022, we know beef demand is certainly tied to economic considerations, especially how are consumers feeling, how's the pocketbook feeling. And the IMF is certainly looking at the global economy to increase by 6% this year, 4.4% next year, certainly more so in the developing and emerging countries than for example, us in the advanced economies. But all across the board, looking at pretty solid growth projections coming out of the negative declines from 2020. So that will be setting the stage, but everybody's watching now as we talk and hear more talking, especially in other countries, about inflation concerns, and what happens to things like interest rates as we go through this next phase. So up until now, the strong economy and consumers having dollars to spend has been very good for beef, and that will be something we continue to monitor as we go forward. The other key piece for Canadian beef, of course, is exports. Just short of half of our production heads to export markets. We know that's been a kind of not a mandate, but a setting point for Canadian beef production for the last numerous years. And even though our total exports were down a bit in volume last year, the exciting news is that the value of those exports climbed to an all-time record, $3.25 billion worth of exports in 2020. So that was the great news. We like to talk about tonnage all the time, but at the end of the day, the value of those beef products and where they head to is just as important. And to start off 2021, we're in great shape again. First quarter of this year, we're up 12% in our beef export volumes and up another 11% in value. So again, Canadian beef finding solid markets around the world. On the import front, Canadian beef imports last year were up by 20%. And certainly that was one of the impacts, especially in the second quarter last year when packing plants were shuttered or slowed down, that end users basically had to go find product elsewhere. And that was the case, and certainly saw all through 2020 running at elevated imports from several countries. Here in 2021, it looks to me like we're going to be right back to pretty close to the levels that we would have experienced in a more typical 2018, 2019 environment. Year to date, 2021 imports are already down 13%. So we'll keep an eye on that, but I think in my mind, 2020 is going to be a little bit of a COVID aberration in terms of how much more beef came into Canada versus what we're going to see this year, for example. The slide on the right-hand side, kind of just breaking those countries down in terms of where the beef came from. Just under 60% from the US. Then comes New Zealand at 9%, the EU at 8%, Uruguay also 8%, and Australia at 3%. So that rounds out certainly the bulk of our importing countries by import. Looking ahead into 2022 and even the rest of this year, I guess, lots of things ahead. I think from what I can share with you, and certainly the data that points us towards the outlooks from a supply perspective, is we do look like we've got smaller cattle numbers ahead. Where they get shuffled around to in terms of imports and exports, I guess, is the unknown. But at this point in time, we pretty much are looking at higher input costs. So let's have a look at how all those things are going to shake out. On the fed cattle marketing side, 2021, we're going to certainly make up for the cattle that we did not get harvested last year. So 2020, our fed cattle marketings, that's both slaughter and exports, were down about 3%. We're going to make that up. We've already made up a bulk of it here to date. So this will be to the end of May. Our fed cattle marketings are up 14% already this year. So been running at some pretty elevated rates. I think as we go forward, we are going to see packers, look at including cows back in that marketing slaughter mix more than they did certainly through 2020 as fed cattle marketings kind of revert back to a more normal kind of mode, especially in the second half of this year. Carcass weights, I've been really pleased to see these weights finally drop in Canada significantly. So we've seen our weights, first of all, let's go back for the record. In 2020, our weight last year was 917 pounds on steers. Second heaviest, only 2016 heavier at 919 pounds. So today, our current weight is 23 pounds under last year. And remember, that's that green line. Last year was impacted by already at this point last year by the slowdowns and shutdowns at the packing plants. Cattle were being held and they were heavier than normal. So we're already 23 pounds off of that. We're still 7 pounds over the 5-year average, but you can see on that chart, we're right back in line with 2019. Right in here over the next few weeks is typically when our lightest cattle come through the system, and then as we go on into July and beyond, we'll see those carcass weights start to pick up again. But not anticipating to have the kind of issues and the record weights that we saw in the fall of 2020 when we were still dealing with backlog cattle. So this is an encouraging thing that tells me the Canadian cattle industry, especially in Western Canada, is current. I think the US isn't quite as current as we are. And they really need to get there, to be blunt, to really start to see some of the arbitrage happen in terms of prices between Canada and the US. The higher input costs that I talked about certainly go back to what's going on in grain markets, and certainly in the impact of China and the trade that's the buyer that they've been of all commodities, but in this case we're talking about US corn being the key driver for US cattle prices. So as we look at new crop and some of the latest WASDA reports that are coming out in USDA reports, but looking at about 91 million acres being seeded here this year, estimated yield off the WASDA report today, 172 bushels to the acre. That's going to put us at a production number that you see on the screen there, just short of 15 billion bushels. So it's certainly up. But it is dependent on everything coming to fruition in terms of the yield and the growing conditions that are anticipated as we go into the summer of 2021. The slide to the right indicating that if that is the case, ending stocks would come in around 9.2%. This past year, that's certainly driving our old crop prices 7.4%. Those are tight supplies of corn, and that's why you've kind of got the reaction that you have on the markets in terms of price. Anytime you've got supply that tight, and you've got China being such a large and powerful buyer, that it can make some pretty big swings in terms of price very quickly. There's the impact, clear as day in front of you. Omaha corn on the left, that's cash corn prices, and Lethbridge barley, again, cash barley prices on the right. But it was just as recent as last summer, early fall, when we're talking about $3.50 corn. Now we're talking about $7. It's dropped off of the highs, but just under $7 presently. So just a significant move into not all-time record corn prices, but certainly for barley, all-time record barley prices. So again, as we headed into harvest last year, we were talking about $200 barley in Lethbridge. It hit a high of $3.60. It's off of the highs a bit today. And again, Stats Canada's told us there's been more acres seeded in terms of Canadian barley. And as growing conditions hopefully improve and we get some rains in key barley areas, that we are looking at new crop pricing certainly lower than our old crop pricing, which will certainly hopefully be supportive to calf and feeder markets this fall versus what we're looking at for current old crop prices. And I think one of the interesting things, just to reiterate, corn has moved. I mean, all feed grain prices are up, but corn has moved up more than barley has moved up. And so for the first time, when I run the relationship of Lethbridge barley versus US corn in Canadian dollars and accounting for kind of a protein equivalent, we've got barley prices back to a feed cost advantage for the first time since the summer of 2017. So we've gone through a long period here where just looking at the cost of feed, we've seen feed cost disadvantage in Western Canada vis-a-vis Nebraska. Certainly basis and other things come into play in terms of, well, why were we even feeding cattle in Canada through this period of time? But to now see Lethbridge barley prices at a premium, that's certainly a positive indicator in terms of the desire for cattle feeders to continue to feed cattle in Western Canada. Looking ahead to what lies ahead. Excuse me, I'm going to take one more sip here. We've got a US market that for the last several weeks has been give or take 120 US. It's above where we've been for the last several years. Many will call this market not really a true market, simply because we've got some extreme packer profitability that's been in place for quite some time, but certainly at elevated levels here in the last year. And cattle prices kind of just floating along, even though we've got wholesale prices at the second highest level in history. That 340 US choice cutout that we saw last week is the second highest in history. So I think as we go forward, the question is, does this market, I think the futures are certainly suggesting to us that the market's going to come off some as we go into the summer. The question is, does it come off kind of more seasonally, or is it a much more flatter decline, more of a subtle decline because of the packer margin scenario? And I guess the answer will be in just how much the cutout does come off. From that low, wherever that low might be, whether it's 110, either side of 110, if it has to be 115, or if it has to sink below 110. I guess those are what are up for discussion. I think in any kind of a normal year, the answer would be absolutely it has to drop below that. But this could be one of those years where for various reasons in terms of margin, we may not see that kind of a hard decline. once we make our bottom this summer, early fall, I do think we are getting into those tighter supplies that I talked about as we go on later on through 2021. And futures markets at present are suggesting that market has got the ability to bounce more than we've seen in recent years, potentially up into that 125, 130 range in terms of the December contract. So we'll keep an eye on that. And I think depending on how current we get, what trade is looking like, does demand stay as absolutely strong as it's been? All those are kind of things that we'll be monitoring as we go through this. Beyond the end of 2021, there's no question that futures are looking at higher price levels, clear on out into the low to mid 130s, even right out into the spring and summer of 2022. So higher prices ahead certainly will be supportive all the way back through the chain, but we need to get there in terms of getting current, getting into those smaller supplies. And the frustrating part is here we are at the middle of June, and it's just taken longer to get there than I think most people would have suspected. So timing is everything. I do think the more bullish numbers are around the corner, but the question is, is it by fall, is it by winter, or do we have to get to 2022? So that will certainly set the stage for what happens here in Western Canada in terms of pricing. We've been trading in the low to mid 160s for the last several weeks as well. And again, well above the price ranges that we've seen in any of the last several years. So where to from here, we do know, or I would expect to see, prices decline as we head into the height of summer. But again, assuming that we're going to be looking at higher prices for the US, depending on what happens with basis, Canadian prices are going to follow along suit. Now, basis is a story in itself in terms of the strong basis levels that we've seen in Western Canada, and that's vis-a-vis our Canadian fed cattle prices vis-a-vis the US price in Canadian dollars. So even with the strong dollar, we see extremely strong basis levels. The month we just finished, May, a plus 18, strongest basis in history. We're running at positive basis levels all this year. The only year ever in history before to see a positive basis for Alberta was 2018, and that was just at a small premium to the US, nothing like these kind of double-digit levels that we're seeing today. So all eyes will be on that, and I think why it's happening today in Canada faster than the US is, simply put, we've been able to get more current faster, get through that backlog faster than the US has been able to. And I do think they're going to get there. But the question is, are we looking at a positive basis level, right through the rest of 2021? And really, are we back to looking at a 5-year average, or are we looking at a positive basis when we start talking about 2022? Feeder cattle prices, same kind of relationship going on there. We've got feeder cattle prices seasonally should be set to continue to grind higher as we head towards August. I don't see any reason to not expect that strength to remain intact. One of the big questions is, can the strong basis that we've got on feeder cattle hold true as well? So far we've seen strong fat cattle basis lead cattle feeders to turn around and bid strong feeder cattle basis prices into the market as well. So that will be, usually our strongest basis is in August, September, October. And here we are sitting at extremely strong record basis levels here in the months of April and May of 2021. So the question is, as I list on the screen, can this positive seasonal trend on our strong basis override those record high barley prices that we have? And for the last couple of years, we've seen pretty much average feeding margins in the red. So can those two buck the system? And I think the answer will be in how strong does our 2022 futures market get, and can it hold the premiums that we see there today? As far as the calf market, I think heading into into the rest of this year, the seasonal tendency is the opposite. Certainly we see from these levels now, we certainly see the seasonal tendency to decline into October. And I think, again, I wouldn't see any reason why not to buck a 9 out of 10 year trend in terms of the direction for calf prices as we had. But looking again, if we are seriously looking at higher fed cattle prices in the spring and summer of 2022, that's going to do a lot to offset these record high beef feed prices. So, for the record, the last 3 years, the Ocnove average calf price 217, 216, 211 on the spot market. And at this point in time, I think it would be hard to buck, that kind of a trend unless we get a significant increase in fed cattle prices. So those are the things that we're certainly going to be watching as we go forward for the rest of this year. So what's on my watch list as we kind of finish off the discussion here today, and then I'll be sticking around back joining you for questions live. We do need to see this U.S. industry get current. Their harvest rates continue to be impacted by whether it tends to be social distancing and still some of the COVID impacts, or recently, of course, the cyber attack and the fact that JBS plants were impacted by that. So there always seems to be something getting in the way of getting enough cattle through the system as we need to. Once we get past that, we truly get current, we know on-feed numbers are going to start to decline. Again, I mentioned the COVID lingering impacts. I think these are wearing their way through the system. And again, we just need to see them get completely put on the back burner in terms of especially the restrictions at restaurants, travel, international travel, all those kinds of things that are only going to aid to beef demand as we go forward. Trade influences, these have been positive. We continue to see, we're looking at US beef exports to be up 10% in 2021. Of course, the data from Canada continues to be solid. So North America continues to buoyed well from strong demand globally for beef, for protein for that matter. The economy is probably the biggest question mark in my list here. What happens with inflation around the world, unemployment rates, these low interest rates, or how long are we sitting at these kinds of levels? A strong Canadian dollar at present, we're flirting just under 83 cents today. Is that something that is going to continue to trend higher, or is oil kind of maxed out at that $70 where it sits today? So these are all kind of influences that we'll keep watching. Global protein demand, especially beef, has been super strong and growing. So that doesn't seem to be faltering whatsoever. And our global cattle herd is simply not growing. I think at best you could call it stabilizing. There's the odd country that's growing, but I've just described to you that the US cattle herd is actually getting smaller. So globally looking at stabilizing at best. And the whole China ASF issue continues to be a draw in terms of their void on protein and their need for whether it's protein or whether it's grain to feed protein in China. All of those things have continued to be positive for the North American impact in terms of moving protein into a shortened marketplace. So lots of things on the watch list. I know you'd like it to be clear in terms of here's where the market's going. Overall, I certainly do think the supply side is on our favor, and we're simply going to have to get to the other side of some of these question marks on the economy. But demand has been great news for Canadian beef and US beef in 2021. So with that, I'll stop and be around for questions. Thanks.